So lately, I've been thinking a lot about real estate.
Hmm.
And, those who've been following along know that we like to look at different sources,
Hmm.
different viewpoints, different strategies.
Absolutely.
And one that I've been poking around in is Xiaohongshu,
Oh, yeah. Little red book?
Little Red Book.
Interesting.
It's kind of like a blend of Pinterest and Instagram,
Oh, interesting.
but with like a laser focus on wealth building and
Yes. Very.
particularly in this case, real estate.
Yeah.
And it's fascinating to see how people are kind of navigating
Yeah.
these really uncertain economic times.
Oh, absolutely.
And one of the things I found that was really, really fascinating
Okay.
was someone who bought 3 investment properties
Wow.
during the pandemic
Okay.
and chronicled the whole thing.
During the pandemic.
Yeah, like
Ah.
dealing with market volatility
Yeah.
and, figuring out remote management,
That's pretty impressive.
incorporating some, wisdom from Naval Ravikant.
Very interesting.
What were your initial impressions when you took a look at this?
Well, it was really interesting. The first thing that kind of jumps out at you is just their emphasis on
Yeah.
positive cash flow.
Okay.
They're not just kind of banking on appreciation.
All right.
They really want properties that generate income
From day one.
from day one.
Yeah.
They actually call it the lazy person passive method.
I love that.
Yeah.
That's great.
Because it's all about minimizing that.
Yeah.
Hands-on management.
Right. So tell me a little bit about like how they calculate that, or like what does that look like in practice?
They have a very specific formula
Okay.
that they use. They take the rent and subtract the mortgage,
Mm-hmm.
property taxes, any potential vacancy costs,
Yeah.
estimated maintenance expenses, and property management fees.
Okay.
If that number is positive, you're in the green.
Yeah.
If not, they basically see it as a liability rather than an asset.
Okay. So it's like a real quick sort of back of the envelope.
Yeah, very much so.
Yeah.
Litmus stress.
Exactly. Very simple but effective
Oh.
way to kind of quickly assess an investment.
Okay, cool. So using this lazy person passive method,
Yeah.
where did they decide to park their money during a global pandemic?
Well, their first 2 purchases were actually in Texas,
Interesting.
one in Austin and one in a town called Kyle.
Okay.
They were drawn to Texas because of its strong
Yeah.
growth potential and good cap rates,
Okay.
which essentially measures the potential
Mhm.
return on your investment.
Yeah.
And in Kyle, they specifically chose newer properties.
Oh, okay. To keep maintenance down, presumably.
Yeah, to keep those maintenance costs down.
Smart.
And they focused on areas close to downtown Austin
Okay.
and major employers.
To attract good tenants.
Yeah, to attract quality tenants.
Yeah. Okay. So makes sense.
Yeah.
So all very, very logical, very
Very strategic.
strategic. Very much so.
Now, I understand they also bought something in North Carolina.
Yeah, they did. They switched gears a little bit.
Okay, what prompted that?
Went to North Carolina, specifically Cary.
Okay.
It seems they got inspired by a post that they came across
Oh.
on an online forum
Okay.
about Cary's potential.
Okay.
So they did some research and were impressed
Mm-hmm.
by the livability
Oh,
and
sure.
growth prospects.
Gotcha.
However, property prices in Cary were higher,
Okay.
so they opted for townhouses
Okay.
instead of single-family homes.
Interesting. Okay.
And again, strategically targeting those properties near
Yeah.
good schools,
Smart.
strong rental demand.
Okay. So tailoring their approach
Yeah, very much so.
to the specific market that they're going into.
Absolutely.
Did they talk at all about their experiences in the Bay Area
They did.
during this time
They did.
with rentals?
They encountered some challenges
Oh, really?
in the Bay Area rental market,
Okay.
had difficulty finding suitable tenants,
Wow.
which led them to lower rents,
Okay.
and even noticed people moving away from the Bay Area
Interesting.
during the pandemic.
Yeah, so they were already seeing those trends firsthand.
Very much so.
Did they have any thoughts on whether these were temporary shifts or like a...
They suggest that family-friendly mid-sized cities
Okay.
like Cary
Yeah.
will continue to thrive.
Okay.
They think the pandemic kind of accelerated a trend
Yeah.
that was already underway.
Interesting.
Yeah.
Okay, so we've gotten a good sense of where this person's been investing,
Yeah.
but now let's get into the how.
Okay, yeah.
Because finding good tenants, I mean, that is like,
It's essential.
yeah, crucial, especially if you're managing things remotely.
Absolutely.
What stood out to you about
Yeah.
their approach to finding those reliable renters?
Mm-hmm. They really prioritize thorough screening.
Okay.
They look for tenants with a solid income,
Okay.
at least 3 to 5 times the monthly rent, and a good credit score, 700 or above.
Right. Okay.
They also insist on references from previous landlords.
Yeah.
And, of course, they verify employment and run background checks.
So they're not messing
You
around.
got it all. Very thorough.
But I'm curious, with so much emphasis on financial stability, how do they assess those less tangible qualities? The things that make a tenant
Right.
truly reliable.
That's where those soft indicators come in.
Okay.
And I was actually impressed by their attention to detail on this.
Okay.
They pay attention to how potential tenants communicate.
Okay.
Are they responsive?
Okay.
Do they seem attentive to detail?
Gotcha.
Have they moved frequently in the past?
Yeah.
These might seem like small things,
Yeah.
but they can actually reveal a lot about a person's reliability.
Right. It's like trying to get a sense of the person behind the application.
Exactly.
Yeah, just their
Yeah.
financial history.
You got it.
And especially when you're managing remotely and you can't meet them face to face.
Yeah, absolutely. It's all about mitigating those risks
Yeah.
and ensuring a smooth rental experience.
So speaking of remote management, I'm sure folks are curious how they handle that.
Mhm.
What's the system they've got in place?
Well, they do rely on a local real estate agent
Okay.
to help with finding and screening tenants.
Yeah.
But when it comes to collecting rent,
Okay.
they handle that directly
Okay.
using online platforms like Zelle, Venmo, or PayPal.
Oh, so they're kind of cutting out the middleman
Yeah, very much so.
and using the
So streamlining things.
peer-to-peer payment systems.
Absolutely.
Okay. And then how about repairs?
Repairs, they've built a network of local contractors.
Okay.
They find these contractors through online reviews
Okay.
and prioritize those with high ratings.
Gotcha. So they're really using technology to bridge that distance
Absolutely.
and maintain a sense of control over
Very much so.
their investments.
Yeah.
Now it sounds like they're not just taking the agent's word for it. When it comes to tenant selection,
They're not.
did they share any examples of times when they had to overrule the agent?
They did. They mentioned a situation where the agent had recommended a couple.
Okay.
Seemed great on paper.
Right.
They had decent credit.
Yeah.
They met the income requirements.
Yeah.
But during their own due diligence, this investor
Okay.
discovered that this couple had a history of relationship instability
Oh.
and frequent moves.
Aha. So those red flags that wouldn't necessarily show up
Right.
on a credit report.
Exactly.
Did they end up going with that couple?
They did not.
Okay.
They decided to go with a different applicant,
Okay.
a family with a stable history
Okay.
and strong references.
Good for them.
And it turned out to be a wise decision.
Yeah.
That family has been a model tenant,
Fantastic.
consistently paying rent on time and taking good care of the property.
That's a great illustration of their
Yeah, it just shows the importance.
thorough vetting process.
Yeah.
Paying off,
Thorough vetting is essential.
especially when you're remote.
Absolutely.
So good tenants equal good income.
Yeah.
All right. So we've explored the lazy person passive method. We've gotten into their meticulous tenant selection.
Yeah.
But finding great properties in the first place,
Right.
that's crucial too.
Absolutely.
How does this investor approach market analysis and deal hunting?
They have a fascinating data-driven approach.
Okay.
They look at macro indicators
Okay.
to get a sense of the overall economic climate.
Like what kind of things?
Things like the housing market index,
Okay.
the unemployment rate,
Yeah.
the mortgage delinquency rate.
Okay.
These broad indicators help them identify
Yeah.
potential opportunities and risks.
Okay, so they're looking at the big picture first.
Yeah.
I've heard of the housing market index, but can you break it down for us?
Sure.
What is it and how does this investor use it?
The HMI is essentially a measure of builder confidence
Okay.
in the new home market. It's based on surveys of home builders
Okay.
about their perceptions of current sales conditions
Okay.
and expectations for future sales.
Okay.
A higher index reading indicates more optimism,
Mm-hmm.
while a lower reading suggests pessimism.
Okay.
What's interesting is this investor has noticed a pattern in the HMI
Oh, okay. What is it?
that helps them anticipate market cycles.
Okay.
They've found that when the HMI peaks above 70,
Okay.
it often signals a market top,
Interesting.
like the years 2000, 2006, and even 2021.
Mm-hmm.
Conversely,
Yeah.
they noted that dips below 40 often suggest market bottoms.
Okay, so they're using that historical data
Yes, very much so.
to predict future trends.
Exactly.
Okay, cool. But how do they narrow down their search once they've gotten that big picture? How do they evaluate specific properties?
So they have a multifaceted approach to property analysis.
Okay.
First and foremost, they calculate the cap rate, which is a measure of a property's potential return on investment.
Right.
It's calculated by dividing the annual net operating income
Yeah.
by the property's market value.
Okay.
They aim for a cap rate of at least 6% or higher,
Okay.
as this indicates a good balance between income and property price.
So that's their initial filter.
Yes, very much so.
What else are they looking at?
They don't just stop at the cap rate.
Okay.
They also project equity growth, cash flow, total return,
Yeah.
and return on investment over several years.
So it's a pretty comprehensive analysis,
It is very comprehensive.
taking into account both the short-term income
Yeah.
and long-term potential.
Exactly.
I think they mentioned Brandon Turner's book,
They did at some
Right.
point, too.
Investing in Real Estate with and Low Money Down.
Yeah, classic.
Classic.
So it sounds like they're really doing their homework
Yeah, very much so.
and crunching the numbers.
Absolutely.
But real estate isn't their only focus, is it?
They're not putting all their eggs in one basket, so to speak.
They believe in diversification,
Right.
especially with the current uncertainty in the market.
That's a smart move.
Yeah.
Diversification is key.
Absolutely.
So what else are they looking at?
Well, for a relatively low-risk option,
Yeah.
they're looking at high-yield savings accounts.
Okay.
They mentioned some specific institutions offering rates
Okay.
significantly higher than traditional banks.
Gotcha.
They also believe in the power of dollar-cost averaging
Yeah.
into the stock market,
Yeah.
investing consistently over time
Smart.
to ride out those market fluctuations.
Any specific stocks they're interested in?
They mentioned exploring individual stocks
Okay.
based on promising companies
Yeah.
and emerging trends.
Okay.
And here's where it gets interesting.
Okay.
They're also intrigued by Bitcoin.
Ah, Bitcoin.
Yes.
Everybody's talking about it.
It seems so.
What's their rationale for venturing into that?
They has a long-term belief in the potential of Web 3.0,
Okay.
the decentralized internet.
Right.
They see Bitcoin as a key player
Mm-hmm.
in that ecosystem
Yeah.
and are interested in buying it at what they perceive to be
Yeah.
lower price points.
Okay.
So they're kind of diversifying across traditional.
Yeah, it's a very balanced approach.
Very much so.
One thing that really stood out to me was the influence of Naval Ravikant.
Yes.
You know, the whole sleep income
Yeah.
idea.
Yeah. Could you elaborate on that a bit?
Yeah, what is that all about?
Absolutely.
Yeah.
Naval Ravikant, a prominent entrepreneur and investor,
Mm-hmm.
advocates for building wealth through assets that generate passive income,
Okay.
essentially allowing you to earn while you sleep.
Yeah, work smarter, not harder.
Exactly.
Yeah.
He argues that trading time for money won't lead to true wealth,
Right.
and this resonated deeply with this investor.
So how do they apply that in practice?
Well, they prioritize investments that generate cash flow
Mm-hmm.
without requiring constant management,
Yeah.
like their lazy person passive method
Right.
for real estate.
Yeah.
They aim to build a portfolio of assets that work for them,
Yeah.
not the other way around.
It's like building a financial engine that runs in the background.
Very much so.
Yeah. Okay, cool. Did they mention any other aspects of his thinking that resonated?
They highlighted Naval's wealth formula:
Okay.
skill times brand times leverage.
So find your skill, build your brand, and then leverage it
Exactly.
to create value.
Yes.
Okay.
So it's not just about passive income.
Right.
It's about strategic positioning
Okay.
and maximizing your strength.
How does that relate to their real estate investing?
It encourages them to focus on areas where they have an edge,
Okay.
whether it's identifying undervalued properties,
Mm-hmm.
negotiating favorable deals,
Yeah.
or efficiently managing properties remotely.
Right.
They're leveraging their knowledge and skills
Yeah.
to amplify their returns.
That's great.
Yeah.
All right, so let's circle back to their Bay Area strategy. Remember, they're all about buy and hold in
Yeah.
those high growth markets outside of California.
Mm-hmm.
But their Bay Area approach is quite different.
Exactly.
Right.
They've observed that the high cost of living
Yeah.
and recent outmigration trends
Yeah.
make long-term rentals less appealing.
Less appealing.
So they're focusing on flipping properties
Okay.
for short-term gains.
Okay.
They believe that the potential for appreciation in the Bay Area,
Okay.
driven by strong economic growth, outweighs the risks
Gotcha.
associated with flipping.
So it's interesting contrast to their
Yeah,
buy and hold
very much so.
strategy.
Yeah.
Any specific areas they're targeting in the Bay Area?
They highlighted a few areas,
Okay.
like 95008 in Campbell
Okay.
and 95117 in San Jose,
Okay.
as areas where they see
Yeah.
potential for strong returns.
So they've really drilled down into the micro level data.
Very much so.
You mentioned earlier that they analyzed specific properties?
Yes.
What stood out to you?
Let's start with that single-family home in Campbell
Okay.
with the large lot and relatively small house.
Okay.
That's a classic opportunity for expansion,
Right.
either by adding square footage
Yeah.
or potentially even splitting the lot
Oh, wow.
to build a second dwelling.
Yeah, so they're thinking creatively.
Very creative.
What other properties caught their eye?
They also looked at a single-family home near Cupertino High School.
Okay.
That was an original condition ripe for a modern makeover.
So a fixer-upper.
A fixer-upper.
Yeah.
They saw the potential to transform it into a highly desirable property.
In a good school district.
Sought-after school district.
Yeah.
They estimated a potential profit of $300,000 to $400,000
Wow.
after renovation costs.
That's not bad.
Not bad at all.
But I imagine flipping houses comes with its own set of
Absolutely.
challenge.
There's always a risk of unexpected costs.
Yeah.
During renovation, potential permitting delays.
And even shifting market conditions.
Right. You just never know.
You never know what's going to happen.
Exactly.
Did they consider any properties outside of the realm of traditional residential real estate?
They did. They analyzed a commercial property,
Okay.
a medical clinic in Dallas, Texas.
Okay.
What's interesting about this property is it's a triple net lease property,
Okay.
which means the tenant is responsible for
Okay.
most of the operating expenses,
Gotcha.
including property taxes, insurance, and maintenance.
So very hands-off.
Very hands-off for the landlord.
But I imagine there are specific considerations
Absolutely.
when you're evaluating these kinds of properties.
Definitely. The key is to carefully vet the tenant
Mm-hmm.
and the lease terms.
Yeah.
You're essentially relying on the tenant's financial stability
Right.
and commitment to that lease
Yeah.
for your returns.
Yeah.
In this case, the medical clinic had a strong track record
Okay, good.
and a long-term lease,
That makes sense.
making it an attractive investment opportunity.
So it's really showcasing their versatility.
Yeah, very much so.
Looking at different
Exploring different property types.
property types, lease structures.
Where?
We've covered a lot of ground today.
We have.
You know, we've seen how this investor navigates.
Hmm.
Volatile market, identifies opportunities.
Yeah,
Carefully selects properties and tenants.
absolutely.
Builds a diversified portfolio
Yeah,
across asset classes.
yeah. It's been an insightful journey.
It really has.
It has.
What do you find most impressive about their approach?
I think what's most impressive is their adaptability
Okay.
and willingness to learn.
Yeah.
They're constantly evolving their strategy
Mm-hmm.
based on market conditions.
Yeah.
And incorporating new ideas.
Right.
Like those inspired by Naval Ravikant.
Yeah.
That's a crucial trait.
Absolutely. For any successful investor,
It is.
it's really inspiring.
Yeah.
This has been a fantastic reminder that real estate investing and investing in general is about more than just numbers.
Yeah.
It's about understanding trends,
Assets.
making calculated decisions,
Yeah.
and being willing to adapt to a constantly changing landscape.
About it.
Well said.
Thank you.
And as this investor demonstrates, knowledge truly is your most valuable asset.
Absolutely.
So stay informed, be resourceful,
Yeah.
embrace a lifelong learning mindset,
Mm-hmm.
and you can navigate the complexities of the market
Absolutely.
and hopefully build a solid financial future.
Yeah.
As we wrap up this deep dive, we'd love to hear what resonated with you.
Yeah.
What insights will you carry forward
Mm.
into your own investment journey?
Absolutely.
What kind of deep dive will you embark on next?
They're not putting all their eggs in one basket, so to speak. What other asset classes are they considering?
Yeah.
Well, for a relatively low-risk option, they're looking at high-yield savings accounts.
Okay.
They mentioned some specific institutions
Mm-hmm.
offering rates significantly higher
Okay.
than traditional banks. They also believe in the power of dollar cost averaging into the stock market.
Yeah. Dollar cost averaging. I mean, that's just,
Tried and true.
yeah.
Investing consistently over time to ride out those market fluctuations.
Yeah, that's a solid strategy, especially for long-term growth.
Absolutely.
Did they mention any specific stocks or sectors?
They did. They mentioned exploring individual stocks
Okay.
based on promising companies and emerging trends.
Okay.
And here's where it gets interesting.
Okay.
They're also intrigued by Bitcoin.
Oh, Bitcoin.
Yeah,
It seems like everybody's talking about Bitcoin.
it seems so.
What's their rationale for venturing into that space?
They have a long-term belief in the potential of Web 3.0,
Okay, Web 3.0.
your decentralized internet.
Right.
They see Bitcoin as a key player in that ecosystem
Mm-hmm.
and are interested in buying it at what they perceive to be lower price points.
So they're really looking at a mix of like
Yeah.
traditional and more cutting-edge asset classes.
Yeah, a little bit of everything.
One thing that really stood out to me in their investing philosophy was the influence of naval ravicant.
Yes.
That whole sleep income idea.
Yeah.
Could you unpack that for us a little bit?
Yeah,
What
absolutely.
is that all about?
So Naval Ravikant's a prominent entrepreneur and investor,
Hmm.
and he advocates for building wealth through assets that generate passive income,
Okay.
essentially allowing you to earn while you sleep.
Yeah.
Work smarter, not harder.
Yeah, exactly.
He argues that trading time for money won't lead to true wealth,
Right.
and this resonated deeply with our investor.
Yeah, it's a compelling concept.
It is.
So how did they apply that to their investing approach?
Well, they prioritize investments that generate cash flow
Yeah.
without requiring constant management.
Like their lazy person passive method.
Exactly, like their lazy person passive method for real estate.
Yeah, okay.
They aim to build a portfolio of assets that work for them,
Yeah.
not the other way around.
It's like building a financial engine
It is.
that runs in the background so you can focus on other things.
Absolutely.
Did they mention any other aspects of his thinking?
They highlighted Naval's wealth formula.
What's that?
Skill times brand times leverage.
Skill brand leverage.
Exactly.
So find your unique skill, build your personal brand,
Yeah.
and then leverage that
Leverage it.
to create value.
Yes, very much so.
Okay, and how did they see that relating to their real estate investing?
Well, it encourages them to focus on areas where they have an edge,
Okay.
whether it's identifying undervalued properties,
Yeah?
negotiating favorable deals,
Mm-hmm.
or efficiently managing those properties remotely.
Okay.
They're leveraging their knowledge and skills to amplify their returns.
So taking those high-level concepts
Yeah.
and applying them to real-world situations.
Right, exactly.
I like that. All right, so let's circle back to their Bay Area strategy.
Uh-huh.
Remember buy and hold,
Yeah?
high-growth markets outside California?
Yeah, outside of California.
But their Bay Area approach is quite different.
Very different. Yeah, they've observed that the high cost of living
Yeah.
and recent outmigration trends make long-term rentals less appealing.
Okay.
So they're focusing on flipping properties
So okay.
for short-term gains.
Okay.
They believe that the potential for appreciation in the Bay Area,
Yeah.
driven by that strong economic growth,
Mm-hmm.
outweighs the risks associated with flipping.
Interesting. So a very different approach
Yeah, very
than
different.
in other markets.
Yeah, absolutely.
Any specific areas they're targeting in the Bay Area?
They highlighted a few areas
Okay.
that they think offer some promising opportunities
Okay.
for flipping.
Okay.
For instance, they identified certain zip codes like
Mhm.
95008 in Campbell
Okay.
and 95117 in San Jose
Okay.
as areas where they see potential.
Gotcha.
So they've really drilled down into the micro level data.
Yeah, they've really done their homework.
They have.
You mentioned earlier that they analyzed specific properties.
Yeah.
What stood out to you?
Well, let's start with that single family home in Campbell
Okay.
with the large lot and relatively small house.
Okay.
That's a classic opportunity for expansion,
Yeah.
either by adding square footage to the existing structure
Right.
or potentially even splitting the lot to build a second dwelling.
Oh, wow.
So really maximize it.
Yeah, they're getting creative.
Yeah.
What other properties piqued their interest?
They also looked at a single-family home near Cupertino High School.
Okay, Cupertino.
Yeah.
That's a desirable area.
Very desirable area.
Okay.
That was an original condition,
Oh, wow.
ripe for a modern makeover.
Okay, so a fixer-upper.
A fixer-upper.
Yeah.
They saw the potential to transform it into a highly desirable property
Yeah, in that school district.
in that sought-after school district.
Especially.
They estimated a potential profit of $300,000 to $400,000.
That's not bad.
Not bad at all.
After renovation costs.
Right.
But flipping houses comes with its own
It does.
unique challenges.
It has its own set of challenges.
Yeah. Did they talk about that at all?
Well, there's always the risk of unexpected costs
Yeah.
during renovation,
Absolutely.
potential permitting delays.
Yeah. Time is money.
Exactly.
Right.
And even shifting market conditions.
You just never know
You never know.
what's going to happen.
Exactly.
Did they consider any properties outside of the realm of traditional residential real estate?
They did. They analyzed a commercial property,
Okay.
a medical clinic in Dallas, Texas.
Interesting. Okay.
What's interesting about this property is it's a triple net lease property,
Purple net lease.
NNN,
Okay.
which means the tenant is responsible for most of the operating expenses.
So that's good for the owner.
Yeah.
Less hands-on.
Very hands-off for the landlord.
So things like property taxes,
Property taxes,
insurance maintenance,
all of that.
The tenant covers all of that.
Yeah, the tenant covers all of that.
But I imagine there are some specific considerations
Oh, absolutely.
when evaluating A triple net lease property.
The key is to carefully vet the tenant
Oh.
and those lease terms.
Because you're really relying on
You are.
their stability
You're relying on the tenant's financial stability
and their commitment to the lease.
and commitment to that lease for your returns.
In this case, did it seem like it was a...
In this case, the medical clinic had a strong track record
Okay.
and a long-term lease.
Okay, so it seemed like a pretty good,
Yeah, it seemed like it
like,
was
solid
investment.
So they're really showcasing their versatility
Yeah.
by exploring all these different
Lease for property,
types,
proper types,
lease structures.
lease structures.
Yeah.
We've covered a lot of ground today
You have.
in this deep dive.
It's been a journey.
We've seen how this investor navigates
Yeah.
a volatile market,
Yeah.
identifies opportunities,
Yeah.
carefully selects properties,
Absolutely.
tenants,
Yeah.
builds a diversified portfolio across asset classes.
A little bit of everything. Yeah. What do you find most impressive?
I think their adaptability and willingness to learn,
Mm-hmm.
they're constantly evolving their strategy
Yeah.
based on market conditions.
They're not afraid to change with the times.
Not at all.
That's so important as an investor.
Yeah.
I think this has been a fantastic reminder that
Yeah,
real estate investing and investing in general is about more than just numbers.
absolutely.
You really have to understand the trends,
Yeah.
make calculated decisions,
Mm-hmm.
be willing to adapt
Yeah, absolutely.
to an ever-changing landscape.
Absolutely.
Any final thoughts before we wrap things up?
This investor really demonstrates that knowledge is your most valuable asset.
Mm-hmm. Knowledge is power.
Knowledge is power.
So stay informed, be resourceful,
Yeah,
embrace a lifelong learning mindset,
you got it.
and hopefully you can navigate the complexities of the market and build a solid financial future.
Absolutely.
Well, this has been another fascinating deep dive.
It has.
We always love exploring these different perspectives and strategies with you.
Yeah.
And we hope you found this one as insightful as we did.
Me too.
Remember, investing is a journey, not a destination.
Absolutely.
So keep learning, keep exploring,
Yeah.
and most importantly, keep diving deep.
Deep dive.
Until next time, happy investing.